The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, another fairly quiet day of trading on Tuesday. This time we were to the downside a bit in the grains and oilseeds with the soy complex, the downside leader, mainly 6 to 7 lower. We did come off the lows at the close, while corn and wheat were down slightly as well. So kind of giving back some of what we saw on Monday. Another solid day in cattle. We did fade a little bit in live cattle into the close, but still plenty of green on the screen there. Let's talk about things. Joining us for a conversation, Jacob Burks with agmarket.net. Jacob, it's good to talk to you again, buddy. How are you?
Man, I am good. It's good to be here. It's been a little bit, but man, we've had quite a bit of information come in here, and it just keeps coming at us. So lots to talk about.
Absolutely. Well, and maybe that's a good spot for us to start here. Obviously, last week, we've digested the USDA numbers, those big moves they had on corn yield and acreage, and now, getting into this week, we got the Midwest Crop Tour happening and starting to see some of those results. And I would still say there are a lot of farmers and traders and analysts. Everyone's still kind of talking about whether or not this big corn crop that's being projected, is it really out there? That seems to be the continued talk of the trade right now, Jacob.
Yeah, I mean, the immediate, conversation piece went to, well, we'll see what the tours, say, and then Pro Farmer Tours, obviously the largest, most popular one that I know of. We'll see what the feet on the ground, when you start putting your hands on that corn, that soybeans, and looking at counts, looking at disease pressure, looking at everything that goes into the middle of the crop. That is what we've discussed as soon as we saw the numbers come out. Hey, let's look at some facts, and then after we get done with these reports, the conversation will go, well, wait for the combines. Combines don't lie. So that's the normal pattern here. We even joked last week, Jesse, that we need to find some way to scientifically put the farmer complainometer, like how much does the farmer talk about? I use the word complain. I get it. That's what they're out there with their agronomists. That's what they're out there doing. But, we hear that talk every year. It doesn't matter where you're at. It could be the perfect season. But, the farmers, when they go out there and they subjectively look at their crop, that's what they're looking for is the problems, right? I mean, yeah, they can see stuff looks good. We got good vegetation. We got all this good stuff. But they're actively looking at what is the negative thing? What could be coming? Do we need to spray again, or do we need to do that? So, I say the complainometer, but it's like, how do you measure like what you're hearing? And from us, we talked to a lot of different people across a big part of the Midwest, part of the Corn Belt. And in this year, I have to register my most scientific research. I feel like that talk has been a lot more. Maybe because I've been out a little bit more. We've been out some field days and stuff. And we're seeing and hearing a lot about that pressure that comes with too much moisture, too much rain, throughout the summer. That's not something that you usually hear any type of complaints about, but we're at that level where some areas and certain areas across the big part of the growing area, across the Iowas and Illinois, that have seen a lot of that, and we're steering and seeing pollination problems. We're seeing and hearing about disease pressure as well.
What I think is interesting here, we can talk some chart action and more, starting with the corn market. And your colleague, Matt Bennett, had a quip on his X account that made me chuckle. Essentially, it was, if you had corn finishing near unchanged on the week last week after the USDA number, you'd think I'd been drinking. It was something to that effect. And I mean, that's the truth, though. We ended up the week pretty much near unchanged, and we've gotten D's corn back to this $4 level. So, it almost feels like the markets had priced in that big USDA number, Jacob.
So all year long, the market comes down, right? So we've seen the market prices coming down from 470, our February average. And from that point, coming all the way down through here, we also have lowered the carryout. So whether you want to talk about the projections that we heard about drought through the spring and what we could see in the summer, that obviously has not taken place. But you also look at the carryout that still continue. We still continue to use it. So there's a conundrum there going into this time. Then you come into the August report, and not only do we, as we go into the August report, we laugh at other analysts because it might be a big crop, right? Then all of a sudden you come in there and they surpass the analyst on what actually could be out there. So the fact is, it's going to be a big crop. Like it's going to be. Is it going to be 180? I have no idea. It could be 190 for all I know. But what I do know is that if you gave us those numbers and said that we're going to be at $4, even touch 410, this week, yeah, I think that I would have probably, laughed at Matt and called him a drunk too. So I no, he doesn't drink. Don't shoot me for that. But that's what I'm looking at is the idea of the market is not taking the fundamentals like we thought it would, because there's a lot of outside factors. There's still a lot of feet on the ground. There's still a lot of things to analyze and figure out before we get to that number anyway.
Well, and I think roping soybeans in here as well. We obviously saw a big rally in beans last week, and a lot of that tied to an early week post from President Trump calling on China to buy more U.S. beans. And then you got the WASDE, and now we're into crop tours and more. And, soybeans, I'd say if anything's there, you still might not love the price, but it's maybe given folks a bit of an opportunity for some marketing moves on the soy side, Jacob.
Yeah, I mean, we've done a good. First of all, we took a big jump out of there as soon as we saw the numbers were down below 300 million bushels and carry out. We drove up to a level. We got some support down there on the chart. I mean, we got some good things working. What you're not seeing is people don't love to store beans. They don't want to store beans. They rarely store beans. So that's the first thing that's going to town. So take a look out there at what that fall basis level's done. Locally here, it's nothing impressive. It's not something that you don't want to jump out there and get, but I don't have any thoughts or opportunities that it's going to get better unless we see something float down the river and get to the Gulf and get a bigger, better export program on soybeans, and that comes with China. And do we see some type of swap of the pen? I've been talking about that with producers here. That's not all I've talked about today is what are we going to do with the beans? We're not seeing that August dryness that didn't fill out the pods like we did last year. That had people guessing and thinking about it. Right now at this point, we're seeing some pretty good moisture come across the Midwest. So that the idea and thought that we're going to see some type of growing problem this season is leading, other than disease pressure, other than some of that stuff. So as of this point right now, you have to we're really fearful that we're not going to get any type of export opportunities. And so, yeah, you're going to struggle with this basis levels as we go through harvest.
And you mentioned basis. That's exactly what I was thinking about here to ask you. I mean, just from a risk management standpoint, corn, soybeans, thinking about basis, there's some pretty tough basis in some areas right now, some unknowns heading into harvest, et cetera, et cetera. I mean, from a risk management standpoint, what should folks be thinking about right now, Jacob?
So that's, I mean, the difficult questions right now, and for anybody is what do you do with the bushels that you can't store? The market's telling you with prices that they want you to store the corn, they want you to store the beans for later. There's carry in the market, but in most cases, a lot of people don't want to put bags on the ground. They don't put ground piles. So to take that and get paid, there's cash flow that you have to consider also. From a risk management standpoint, you got to pay some bills. So, ideally what we were, telling people, a couple of weeks ago was, hey, go lock that basis in now, get it wrapped up. And it still might be something that we need to do at this point right now, depending on what your local basis is doing. Use some calls to take, we don't encourage, commercial storage, especially if it's at a too high of a price. We encourage, hey, getting that money locked up, putting that money in your pocket. And then if you really want to have an opportunity for a January China deal, maybe, something that after harvest, something that we're going to see an opportunity for these prices to rally after harvest, then go out there and spend 15-20 cents on a call spread that gets you out into the spring, and it opens that top side back up for you on those bushels. So that way you can go out there, you can feel you have the courage. We'll use them as a courage caller. You have the courage to go out there right now, lock in some prices, so that way you have some ownership as we go through the winter.
We're having a conversation with Jacob Burks from agmarket.net here today on Market Talk. We haven't mentioned the wheat complex yet. I know that's been a tough conversation too, and that's tied to a lot of the globalness of the wheat market. Everyone's watching the Russia-Ukraine talks and so much more. But for you, when you look at Chicago, KC, spring wheat, any thoughts? I would say spring wheat, the last several sessions, has maybe fared the best out of the three, but just looking across the wheat complex, what's your thoughts there, Jacob?
I mean, most of our wheat, we're seeing it's made, it's felt. I mean, I'm watching the dollar index, and then how are we going to compete globally? on the wheat market. Every time that you see, go back to 22, whenever we saw bombs start flying from Russia to Ukraine, we got fireworks out of the wheat. Now it's almost like we don't even look at it. They're talking about having a truce. I mean, that's probably not going to be a lot of optimism in what happens with wheat prices if they're coming on to a more global competitiveness with Russia and their wheat complex. So I played the wheat market or used the wheat market with my customers to just say, hey, let's protect the uglierness, if that's a word. Anything that's going to get more ugly than what it is, because right now it's just laying some type of floor protection in there and laying that bottom line price in with a put option. And then just looking some type of a potential move up because of something that we don't know about yet, some type of trade deal that's going to do an agricultural benefit to us shipping to a new partner. But right now it just doesn't. The writing's not on the wall. Something has to change.
Let's go over to livestock. Let's start with cattle. Again, volatility here so far this week. It's to the upside in futures for the most part. Good day Monday, decent day Tuesday. We did fade a bit into the close, but I've kind of shifted my terminology. Instead of talking to folks about the top in this market and more, it's almost just like, okay, the volatility in cattle is off the charts, and I think we're all just buckling up for the ride at this point, Jacob.
Yeah, you got to come up with those new words like uglierness or beautifulness. Get creative, because that's what you're seeing, a creative market. I mean, you haven't ever seen one like this. We've never seen a cattle market.
Nope.
This is something that's just out of the ordinary. You can set and predict and project numbers that you want to say $4 for all I care. I don't know. I don't have anything right now that says we can't go there, because it just keeps moving. I mean, look at the what scares me. And we were talking about, okay, when's the top? We try to look at this from a logical standpoint, and you see the patterns that we've had in the feeder cattle. The limit days have been limit down. You use all the terms, the escalator up and elevator down, falling off the cliff, whatever you want to happen. But that's what happens when the buyers get absent. It goes violently. And so that's what usually hurts the producer more. So we've encouraged, for 50 cents now, we've encouraged guys to, hey, lay some floors underneath there, manage them, roll them up, just play this thing. You have a lot of equity out there, especially these backgrounders, these stockers, like until they can stop making money, they're going to continue to buy the calves, right? And when it comes not profitable, what they have to be prepared for is you can't go out there and be aggressive, making a hedge, go out there and locking the top side in without doing something on the other side, because when it comes time to fill it up, you don't know what these calves are going to be worth. So if you're not using risk management in this, I don't know how you're functioning. I don't know how you sleep at night. So.
Mm-hmm. Well, and I know, too, a lot of folks in this cattle complex, the beef industry and more, that they're watching boxed beef, for instance. I mean, you got choice back above 408.20 was the midday Tuesday. Select is not too far off its heels, 379.78. So, I mean, you watch that and you think about this retail demand. And I mean, this is something you're hearing more and more chatter from consumers in the mainstream media about high beef prices. So maybe that's something to keep an eye on here as an indicator of a potential pullback. But yet again, this market just seems to find its way to keep churning and churning to the upside, Jacob.
Well, golly, in the last year, since the cattle markets have been going up, Jesse, I think every time I get on here and start talking about stock market, I don't even care what stock market's doing anymore. People want beef. They like beef. They're going to continue to purchase them. We talk about, remember what happened with eggs when eggs got so expensive, with the layer issues that we had in the egg facilities, and they got to a certain point where when the problem got fixed, it rolled over pretty quick. But they were still buying some eggs. Like, it didn't deter people. I look at the $4 or $5 gasoline and diesel prices. It just, people continue to function the way we're used to. And so it's hard changing those habits. I'm no retail psychologist or economist and look at these and follow that to a T. But I can tell you, when you get used to eating the beef, you continue to eat that. And I think that's what we're continuing to watch. I've seen certain news outlets that have covered it that you never talk. You can tell when they talk sometimes that they don't cover it very often. And it's something I think is unique. I think it's getting the word out there that, hey, they're letting America know that that's what is going on in preparation, that it could be getting higher. And I don't know that I see anything right now that turns anything over, especially the way we went out and have protected the borders, protect the industry. I think that was something that I was anticipating, a plan to open the borders up when she spoke. And, the Ag Secretary Rollins came with a plan to make sure that doesn't happen and doesn't hurt our industry. And I think that was huge for what we're seeing, and just another boost and another opportunity for that. We're not gonna open that up soon.
How is, in your mind here, how has cattle influenced the hog market, the dairy market, or maybe hasn't influenced some of these other proteins? I mean, what's your thoughts there?
Yeah, that would be my answer, Jesse. I think if you talk most people, you talk about supply demand elasticities. You talk about the different supplementary products that would fill that need for protein, and it's there. I think it's drug it along. But you've seen that separation that I'm surprised. I would have expected to see something a little bit stronger correlation to one price moving higher, the other following. I think it's obviously the supply of hogs can change a lot quicker than what that beef can. So I would say that I would be more surprised on every end of it: poultry, pork, the other complementary products, that I would not see that correlation as strong as what I thought. I mean, now you look at hogs. I mean, hogs have rallied in the last little bit. We've found some choppiness over the last month, and now we're kind of settling in to where everything's condensing. Everything's coming into a almost a pennant formation, and looking for some type of breakout there. And I think if beef prices continue to go, I think it's inevitable that they should go higher.
Good thoughts as always. Anything final, Jacob, you would mention or reiterate to folks on the show today?
Oh no, I mean, I think we covered cattle. I mean, my advice on the livestock side of things is find a way to have some type of downward protection, even in the grain markets. The idea that we can't go down to 340 or 350 in the corn, that's still available. You come down to look at the soybeans. We've got a nice rally off of a little bit higher yield, but a lot less acres. I don't know with the pod counts that we're seeing, and that's something that we'll find out. We're in the middle of day 2 at the Pro Farmer Tour. We start throwing out some huge pod numbers and talking about an increased yield. Maybe the disease isn't as bad, widespread. All of a sudden, you could see something. It's not, if you don't have enough storage, or if you have a cash flow needs, it's not a dumb idea still to lay down some floor protection in these grains. We're still above $4 in corn. We're still trading above $10.30 in the soybeans. You've heard a lot of talk as we went through some of the spring and some of the summer to early summer that we could see $9 in the beans pretty easy. $9 down to the lower nines, down to $3.50. That stuff's still in play. So I think that using that downward protection is still not a bad idea.
Well, I know you guys have a lot of great information online, website. You guys have a mobile app, plenty of intel, a lot of ways for folks to get in touch and interact with you guys and the team there at agmarket.net, right, Jacob?
Oh, absolutely. Just go to agmarket.net. We do a 30-day free trial of our intel and then our My Farm portion of that app. I mean, on our intel, you've even got smart people at AgMarket that you can listen to. So take a look.
agmarket.net for more. Jacob Burks, always good to talk with you, my friend. Thanks for joining us on the show. Have a great week.
Hey, thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.